This is going to be one of the most important videos you will ever watch on real estate investing in Nigeria. By the end of this video, you will know one of the easiest ways to enter the real estate market for the highest possible returns. I'm talking about 50% yearly, 50% returns yearly. Now, for those of you who know me, you know that I don't bullshit. I always give straight value. But for those of you who don't know me, you're welcome. My name is Duru Bond, and to be honest, there aren't a lot of people who understand this business as much as I do and are willing to share it publicly. The information you will get in this video, you will never get it anywhere on the internet. So it is your best interest not to miss a second. But if this information is very valuable, why exactly am I giving it out for free?
If you're good at something, never do it for free.
The truth of the matter is that I'm looking for investors, right? Nothing goes for nothing. I have a couple of projects lined up for 2025. And it's my belief that sharing this information with you people will spur some people to want to do business with me. So if at any point what I say resonates with you and you want to discuss business with me, please feel free to shoot me an email or send me a DM on Instagram. That's where I'm most active. So I'm always active on Instagram, so you can send me a DM there. Let's jump in. One of the common complaints, or will I say the concerns a lot of investors have in the Nigerian market is our economic situation. Most especially the condition of the Naira. The Naira is depreciating, at a crazy rate. You come in with your dollars, $200,000, and in a year or two, the dollar value is wiped off. Yes, you might get some value in Naira, but in dollar terms, you're going to lose a lot. But the truth of the matter is that there are still ways to make it work in Nigeria. The problem is that people do not really define, or people have not really defined who they are, right? You have people who claim to be investors, but they do not enter the market with the mindset of investors. Now, there are two basic categories of people in this market. I've mentioned it in one of my videos before. You have the sentimental buyers, and then you have the investors. The problem is that the investors, they think like the sentimental buyers. Now, the sentimental buyers don't care about return of the investment. They do not care about ROI. They do not care about depreciation of the Naira. Their own is that they want to fulfill a certain desire that they have in them. Probably that house or that property is a symbol of success. They work so hard and then they spend that money on that land, and anytime or that house, and anytime they see it, they feel satisfied. They feel like they've achieved something. Or some of them who couldn't make it work in Nigeria, they went to UK, they went to Canada, they went to Netherlands, and they made it work, right? And they decide to now build a home or build a house in Nigeria as a symbol of the hard work that they've done, to show that yes, this journey that they went on in a foreign land has actually, been able to bear fruit. So that house is what it means to them. So, as an investor, you do not have to enter the market with that same mindset. As an investor, you have to understand that if you want to have higher rewards, you should be ready to take significant risk. Now, those investor buyers, they are not the types that are interested in off-plan. They are not interested in, 30% return, 40% return. They just want to see a good house in a good environment, they buy, and they are satisfied. They do not care about any other thing. But as an investor, you need to understand how the business works. And currently, to be honest with you, the only way Nigeria will work for you is if you have the mindset of a developer. Now, there are three broad categories of this market. We have the financiers. Now, the financiers are those who bring the money. They have the cash, not necessarily the skills to build, but they have the cash. So this can be the banks, this can be private lenders, this can even be private individuals who have the money, to finance projects. Secondly, you have the developers. Now, these developers, they don't necessarily have to have the money, but they understand the market, and then they understand, the construction and everything, the business part of it. So they get the money from these financiers, execute the project, and then sell to the market. At the third part of this chain, you have the off-takers, right? Or that call them the primary buyers. So the developer sources some funds from the financer. Probably is not enough, or they want to sell quickly. So what they usually do is that they sell at a discount to off-takers. Now, these off-takers, they see this opportunity, but they also understand the risk that buying into this project at this time, there's no guarantee to be delivered. Or even if the project is delivered, there's no guarantee that it will be delivered to a certain standard, right? But they are willing to take this risk because they know that they are going to get a discount on it. Many of them, they retain the property. Many of them, they buy it to flip it at the end of the day. Then you now have the sentimental buyers, or the end users, or the secondary buyers. Now, these ones buy it when the property is finished. The food is cooked. They just want a finished meal. They do not care about every other thing that goes to the back end. But the truth of the matter is that these secondary buyers, the final buyer, is accounting for all the risk, or is taking care of all the risk these other people took. And typically in this market, currently inflation rate is about 33%, right? So everybody along this chain is looking for at least 30% return for whatever risks they took in this chain. So the financer is getting is 30%. The financer, like I said, can be the bank, can be a private lender. The developer is also looking for his own 30%. It can be higher, but let's just use an average of 30%, right? Then you have the primary buyer or the off-taker. They're also looking for their own 30%. So you as the primary buyer, you are going to settle all these other people before you have the final price of your own product. So it will be very difficult for you to now be expecting to make ridiculous returns when you're basically made these other people cash out. They've taken all the profit on the property. So you did not want to take any risk. You do not have any right to complain that the market is not good to you. If you actually want to, make more money, if you want to see significant returns, you should be ready to take the kind of risk these other people took. Now, the financer took the risk giving the money to the developer because he's not sure the developer will deliver. The developer can take that money and japa, can get out of the country, right? But he lent the money to the developer with the hopes that the developer is going to deliver. Now, the developer took money from this off-taker. This off-taker took the risk on the developer, not sure whether the developer is going to deliver. Also, the developer is also taking the risk on his own part because he's selling at a certain price. He's not sure, especially with the condition of the country. You sell a property for 50 million today. A ton of iron rod goes from 500,000 to 1.5 million naira in a space of 2 months, right? That is a significant risk the developer is taking. So all these people taking this risk along this chain, they are entitled to make significant returns. While you, who refuse to take no risk, nothing for you. But sometimes some of you can be lucky to actually get some returns, but you do understand how it is now. So this is what the value chain looks like. So if you want to make significant returns, you need to find your way up the chain. Now, there are various parts of the real estate market. It's not just limited to residential build and sell, right? I'm going to put up an image here. So these are the various breakdowns, but this video is going to focus on just the residential part of it. And I'll be giving you real numbers, right? I'll be giving you various deals that we have available, and if you're interested, I can link you up to them, or we could talk more on it. So the first example we're going to take is this land. It's located in Osapa, London, and it measures 1,800 square meters. It's currently in the market for 700 million, right? And on this land, you can fit 10 units of terrace, 4-bedroom terrace duplexes on it. Now, on the average, it's going to take you about 500, 600 million to deliver those 10 units. So you're all in 1.3 million or 1.3 billion, right? However, the selling price for terraces in Osapa, London, in this location, goes for about 200 to 250 million. So it means that you're looking at a revenue of about 2 billion to 2.5 billion when all is said and done. And this can be done within 12 to 18 months. So 10 to 12 months for construction, and then give 3 or 6 months for marketing, for the sales period. Now that gives you an easy 40 to 50% return. So it costs you 1.3, let's even say 1.5 to build, and then you sell it for 2.5. That is a 1 billion naira profit. Now let's take an example on the mainland. So this land is in Ikeja GRA. It measures 1,200 square meters, and it's currently in the market for 1 billion naira, right? Now on this land, you can fit 8 terraces, 4-bedroom terraces. It's going to cost you what? 400, maximum 500 million to build those 8 terraces. However, terraces in this location sell for around 400 million naira, 450. I'm even saying 650, but let's just use average price, 400 million naira, right? So it's going to cost you 1 billion to buy the land and about 500 million to build. But you can sell this thing for 3.2, 3.5 billion naira. We are talking about over 100% return. So these are the realities of the market, right? Now let's take another example on the commercial side, because this is an area a lot of people are not really familiar with. Everybody is always residential, but there's a lot that can be done in the commercial part, in the commercial side of things. You have warehouses, you have hotels, so many options. So this land is in Igbo, directly facing the expressway, and currently selling for around 600,000 naira per square meter, right? The size is 2,000 square meters, so about 1.2 billion naira to buy the land. Now, if you build a plaza on this land or a shopping mall.
So, guys, come with me on my baby to shopping mall. Baby, say hello.
Are you making a video?
Yes, baby.
It currently sells for about 1.2, 1.5 million per square meter in this location. Now, let's assume, to be honest, full disclosure, I've never done a commercial project before, purely residential. But let's say it costs about 500,000 per square meter to build. If you do your calculation, you'll be seeing, around 40 to 50% return if you take on this project. So there are so many lands like that, so many. I have dozens of them. So, like I said, the main point of everything I'm saying is that for you to really see returns in this market, you have to think like a developer, find your way up the value chain. So you either come in as a financer, come in as a developer, or an off-taker. But if you're waiting for the table to be prepared before you in the presence of your enemies, please do not blame the market. Hold yourself responsible. You are not ready to take any risk. You are not entitled to any reward, right? You're going to be, in crypto, they say you're the bag holder. You're the exit liquidity of every other person, along the chain. Now, a lot of people are hearing these figures, 1.5 billion, 2 billion. I mean, is this guy crazy? Where does he think this money is going to come from? Calm down, I understand. Let me introduce you to the concept of joint ventures, JVs, right? Now, JVs where a couple of people come together to partner and execute a project. So at the base level, you have somebody owns the land, right? And that person has the financing to, build the project. And at the end of the day, they share, the profits with each other. I'll give an example with the project we did, right? So this is our project. We did this project 2021 in Ikate, sorry. We did it in Ikate, Bangbala Street. If you get to the end of Bangbala Street, for those of you that are familiar, you have Veritas's project on the left. You see these are our 10 terraces on the right? Now that land measured, I think, 1,750, and we put 10 terraces there. This was 2020, 2021. We sold it 2021. Built 10 terraces there. Now, the value of that land then was about 275 million. We linked up with the landowner and we got into a joint venture partnership. So he owned the land, then we came and built the terraces. Then construction wasn't as crazy as it is today. That entire project cost us, at the beginning, when we did our BOQ, it was supposed to cost about 300 million. But, COVID happened and everything. So it ballooned to about, I think we ended up with 370, but it was still a good, we were still in a good position. Not much as we didn't make as much as we were expecting. We ended up spending about 370 on that project. And we sold the 10 terraces. We sold it to one person. We sold it for ₦1 billion.
Hi guys, these are lovely 4-bedroom terrace duplexes located at Ikate, Lekki, Lagos, Nigeria. All 10 units have just been sold by
right? And it was a 50-50 sharing ratio, because the way the joint venture works is each person comes with the equity and then the returns is shared according to the value of the equity each person brought. It was a 50-50 share. The landowner's value, then the value of his land was 275. So we shared it 500. Each party got 500 million. Like I said, according to the plan, but we had some other arrangement, but 500 million. Now, the landowner, his land cost 270, and in, I think, 14 months we were done. In 14 months, he made 500 million, right? That is almost 100% return in 14 months. But for us, we went in 370 and then we made 500. So about 40% thereabout. However, to be honest with you, the market isn't as good as it was then. Like, things have become very bad. The cost of construction has ballooned, but the prices of houses they haven't really grown as high as or as fast as the cost of construction, because if it does that way, nobody will be able to buy anything. So developers are not struggling with lower margins. But so let's go back to the first example I gave, the land in Osapa, London, 1,800 square meters, 700 million. You as an investor, you come with 700 million. That is your equity there. Then you look for a developer to come and build those 10 terraces for you. Now those 10 terraces are going to cost about, like I said, 500, 600 million, right? And then you guys sell it for 2.5. So your own equity there, let's assume a 50-50 sharing ratio. Your own return from the deal is going to be what? 1.2 billion. But equity in it was 700 million. So you've made about what? 40-50% in 12-18 months, however the duration of the construction is. So that is how it is. So you don't necessarily have to go into everything alone. Even the land, you can gather seven of your friends. Each of you brings 100 million naira. You buy that land and then look for a developer, execute it, and in 18 months you guys are out. Like I always tell some people I talk to, the way to survive in Nigeria is to make sure that you don't do long-term investments for now, at least till everything stabilizes. Hopefully by, I don't know when, but by God's grace, things will stabilize soon, right? But till they stabilize, what you should be thinking of is get in, get out, like very quick entry and exits. And I believe that is the best way to go about into this market. Again, I'm not a financial advisor. This is from my own experience. It might not work for you. Speak to whoever I want to speak to. But if you want us to talk, like I said, I have so many deals. I can break it down for you. You can send me a DM, send me an email, and we can expand this discussion further. So if you got any value in this video, please drop your comments. You can share this video with your friends, whoever I think will be interested. And depending on the reaction I get from this, I might do more of this. Like I said, there are so many areas of this real estate business. We just talked about residential today. In another video, I can talk about how you can make money, reselling land, right? That's what developers do. Go to, areas that are yet to develop. There are things you can do to increase the value of the land, and then you resell it to people who actually want that land. And you can make your money 50%, 100%, in a matter of months. I remain Bond. See you next time.